And we're live. Welcome to the live stream. So, if you are rewatching this live stream, as always, like I always say, when I put my journal out, you'll see this on the screen. That's when you know that I take a trade. I like to blabber a lot. If I have no viewers, I like to do outreach, reaching out to people to see if they're interested and want to learn how to trade. If you have any buddies that want to learn how to trade, please do this with them. It'd be awesome. I love teaching groups. Um, so yeah, if y'all getting together, you get one, they get one. If you have another buddy who gets one, I can really excel all three of y'all really fast because y'all are doing this together. Alrighty, well let's get into this. I'm gonna do our top-down analysis here. Um, and then the mentorship, I'm redoing the course again and again and again, trying to make it more perfect and perfect and perfect. If you have any questions at all, please ask me. I love to improve it. I love to change things up. I want to grow. So let's get into this. First things first is my high time frame. What do I see here? What I want to do? Okay. Got a setup here. High time frame. What else do I see? Yeah, I see one right here. And then I see one more right here. Okay. And this is the downside. What do I see? All right. The 10-minute zone delivered there. Okay. Lots of zones. Yo, what's up, Mr. Money Glitch? I love that you show up. I hate that you haven't gotten to the mentorship yet. I got a course in them that I'm constantly redoing. Hmm. I wish there was a way. No, there's not. Okay. Yo, yo, yo. Mr. Money Glitch, what is up? Dude, get into the mentorship already so I can take you to the next level. I keep redoing the course and I'm getting more and more into like market direction. I should finish this today. It's gonna be really, really good. I even have like a private only mentees post their journals and only for this setup. So it's so beneficial. I'm doing my top-down analysis right now. Um okay, so let me do initial balance. 830 is where? 830 is right here. Okay. All right, that should be easy. High and low. Let me adjust this a bit. Wait, where was 30? Oh, it was right here. Okay. Then I need to do, what else do I need to do? 930, blah, blah. London. 3 to 8. Where's it at? 3 to 8. Oh, okay. So the low was more over here. Let me find out where that low is at. Where does 8 o'clock hit? Oh, right here. Yeah, definitely the low. Okay, let me change that to my London line. And then the high from 3 to 8 was definitely up here. Okay, I think I have my analysis set. Oh, the highest and lowest sweep, I almost forgot. So, what am I looking at here? I see one that held pretty strong. Let's make this video red. Okay. And then I see another one. Oh, man, there's a lot. This is pretty bad. Okay. I'm not liking what I'm seeing currently. Okay. And then let's try this out first. Okay, let's see here. So there's a zone that's right here on the 1 minute time frame that I might take the trade on. Price came out, tapped, definitely broke standard deviation. It's at 50% of a higher time frame zone. I'm really interested in it. London's above it. Also, I really like this play up here. Let me change a few things here. Okay. What else am I looking at? Oh, the lowest sweep. All right. Send this out. We have news at one time. 1:30. What is it? Oh, FOMC is today. Oh, geez. I did not know that. Wow. Ay, ay, ay. Yeah, I don't recommend trading these FOMC days. I normally take losses on these days. What is FOMC if you don't know? It's basically price is gonna go really, really up or price is gonna go really, really down. We just don't know. And it's not till 1 o'clock. Yikes. Damn. I might not be able to skip a trade afternoon. I would be skipping afternoon just to skip the news. It's too dangerous to trade, especially 1 to 1:30. There's a joke that this gentleman named Powell, I don't know if I'm pronouncing it right, that he makes stocks fly to the moon. So you can just gamble that price is gonna go up because normally when he talks, price goes up a lot. Don't know why. It just normally does. Okay, I want to take this play. It's a bit reckless because how far we've came from it, but it's in the middle of a 15-minute zone. There's London above it. I'm liking it a lot. I really want to take it. It's 12 contracts. That's 10, 11, 12. Let's change this to mean. And then let me put my cutoff time also. It's 11. Okay. Do I see anything here? Yeah, well that's, it can just be direction. Let me make it green. All right. Yeah, I don't see nothing. Just this play right here, but there's too many taps. It's too sloppy. If it was more clean, this would be a really good play because we're confirming bullish. But I think we're gonna fill this area and dump. And then when we do dump, I'm targeting this area right here. So when we reject up here, I can look for a play to the downside, so I can find a bearish play. Basically meaning I'm just gambling to the downside because price is going down. And the setup we're looking for continuously, I'll show you to the downside and to the upside. So this is to the downside. This is to the upside. We're looking for the downside. We're looking for a sweep here. Sweep. So we get that new swing high. Oh, first let me do swing highs and swing lows. Swing high, swing high, swing high, swing high. Swing low, swing low, swing low, swing low. Okay? Every little mountain is a swing high. Every little dip's a swing low. These candles right here, swing high, swing high, swing high. The bottoms are swing lows, swing lows. Same thing again and again and again. Okay, it's not complicated. If we zoom into this, we see a sweep right here. See, it comes and takes the new high right here. This new high takes it. Okay, let's make this the candles. So there's a sweep right there, the new high. So you get that swing low. You can create a zone from there. There's a zone. Okay, you see all the what I'm talking about here? Sweep, swing high, swing low. Sweep, swing high, swing low. So let's create the zone. The same thing here. To the upside, let me show you. We sweep to the downside, so there's a sweep right here. So the swing high and the swing low, and we create a zone. Okay? And this is all we do. We look for this pattern. We're expecting price to come back, tap the zone, and after it taps the zone, we want it to break structure once again. Just like they did the sweep up here. Same concept. Taking this low, so it comes down and sweeps. We need that break structure to still happen. See how this price came out and never tapped? If it came out so far away, then tapped, I still need that break of structure to happen. So price still needs to come out and break structure. That's if it came out and tapped. Okay. Same thing with the upside. The sweep, create the zone, price needs to come back, tap it, and still break structure. Okay. So after it taps and breaks structure, our last requirement before entering is that we need to make sure it reached 100%. And it doesn't matter when it reaches 100%. It's just to make sure it does reach 100% away. So that means two zones on top of each other. And to make sure it reached 100%, see it did. It's called standard deviation, 1 SCDV. So 100% away. After reaching 100%, I start to begin counting taps on the zone. So if we tap the zone 3 times after standard deviation, I won't take the trade. So if I see 3 taps after standard deviation, I won't take the trade. And then I enter at 50% with my take profit below and my stop above. Same thing right here. Enter 50%, take profit above, stop below. Do you think zone you're taking above will be good? I think the zone I'm taking above is lower probability. My thesis here is that we're in a 15-minute zone right here. 15-minute zone. And we're going to come in. We're already reacting to the 50% of this 15-minute zone. I think we're going to push up a bit. We have London right here. We also, I'm sorry, we don't have London. Let me take that back, what I just said. What is this line? Oh, we have the initial balance fib right here. And I wonder why it is right there. See, 830. Oh, okay. Yeah, so we have initial balance fib right here in the zone. We have London above. My main confluence was the resistance line in the zone and 50% of the high time frame zone being next to it. Let me get rid of these. Let's see, but if we come back down and reject this 50% of this 15-minute zone, I'll take my order off. I just like how clean the zone got created. I'll show you more of it right now. So I'm just trying to get rid of all these drawings here. Okay, so let me show you what I was looking at. Sweep is like right here. Let me adjust this more. There we go. Well, this was news too. I didn't realize. Swing high, swing low. Price comes out, taps, break structure. Reach 100% away, and then waiting for 50%. But like I said, we're in a 15-minute zone. So if we come back down here, I'm not interested. Which we more than likely will come down and fail. It's right here. Let me see where 12% is at. Let me check real quick. Main. Yes, 12%. So So as soon as it touches this, then I take my order off. Let's see if we come back up though. Do I see anything here? No, not really, no. No, I do not. Just to be clear, I wouldn't take the zone if I didn't have any confluences. If it was just far, it's just because it's too far away from the morning. Because this play didn't get made until 7:30. That's way too early for me. That means a lot could have changed or could have happened. And I'm trading the 5-second time frame, so it's just it's like a million candles. I see a setup to the downside. It's lower probability. I'm not sure if I want to take it. I like how it's at where 50% is at. Let's see. Oops. I might take it, to be honest. Let me see where one standard deviation is at. Okay. See where 40% is at. Main. Okay. I'm liking the setup right here. Let's do our short here. $21, 15, 5, sell 1. It's a lot of contracts. 21. Okay. So what am I looking at here? I like how 50% is right here. We have a sweep, swing high, swing low. Price comes out, taps the zone, break structure, reach 100% away. I'm not gonna like this setup anymore. If we reach that 12%, unless we bounce it, let me see. Yeah, 12% is right here. If we cross pretty hard, I'll just take my orders off. Then maybe we'll come back to it or not. We'll see. It's 21. I've been debating on getting on the mentees to switch to a different prop firm than TopStep. One that gives you instant funding. I think I'm more likely gonna do it. Just not sure yet. I just like how TopStep X is very beginner friendly, but with a different prop firm, I can just keep the mentees on TradingView, and they can copy trade and do everything. Like they can start their journey from copy trading, from the start of backtesting on TradingView. All right, but the already funded accounts though are like $200, and I think it's okay because if you were trading and you were doing exactly what I was saying by backtesting enough, understanding what to do, then I don't think you would have any issue receiving a funded account. Like it wouldn't make sense to me why you would blow it if you followed everything in the mentorship. I'm liking the setup so far. I'm liking how we're not fully jumping into it. We're getting a bit of a pullback here. I want a nice tap. That'd be sexy. They're not very perfect. But I like how I'm getting a bit of a pullback before entering. Come on. I really want like a real sexy reaction to the zone. So to the zone, sorry. There we go. So that's what I was looking for. The super duper duper perfect tap and the different change of color candle. I hope we enter here. We're entering. Come on. Let's not break this eternal swing, buddy. I really want to take this play. Let's be ready for it. I don't want the same thing to happen. What happened yesterday? I was stretching and it hit my TP, but I wasn't able to move it fast enough. Come on, please don't chop. I'm liking this less and less now. That's a turtle swing. Oh, you can argue it's right here, but this is more valid to me. Come on, buddy. Come on, buddy. I'm risking I'm doing a prop firm right now. So right now I'm risking $200 to make $200. I'm not liking how this tap broke this eternal swing. It seems like it's holding though, but we'll see what happens. I really don't have belief that we're gonna come back up. I'm pretty sure we're gonna dump to fill that 15-minute time zone. If you look real hard, you can see it right here. The sweep, swing low, swing high. And then I'm more lenient with these higher time frame zones, so there's no tap. Okay. Yeah, I don't see anything else right now. I'm liking this less and less. I'll leave them just for now. I might come back to them. I have a bad habit of just removing the orders and then changing my mind later. But I can just change my mind when we get closer to it. Gee. Hello, Noah. Nice seeing you again, buddy. I'm glad you're taking your education to a different level now. Let me know if you have any questions at all. If you don't understand what you're seeing, I can show you the setup to the downside. We're just looking for this pattern. We're looking for a sweep right here, meaning that price is going higher than the previous high. So over the swing high, we get the swing high. Swing high right here, swing high right here. The sweep happens. We then get that swing low, the swing low right here, and we create that zone. So let's create the zone. Let's make it bright green or bright red. Then price is going to come out. And if price is basically going up and down. So see all these white lines? It's up and down. And I'm just grabbing these swing highs and these swing lows. So price is going up and down. Price goes back to touch the zone. So we tap the zone. We then break structure. Then we want price to reach 100% away before we enter. It can reach 100% away whenever it wants to. We just need that requirement before entering. So I reach 100% away. Awesome. And then we're expecting price to come back in, fill us at 50%, and come back down and hit our take profit. And our stop is one tick above. So as you can see in this example, price is going up, sweeping right here. Price comes down, taps the zone, comes back down, breaks the structure. After the tap, it reached 100% away. I have my order here at 50%. I have my stop above and my take profit below. I'm betting that price will come in, fill me, and come back in my take profit. I'm just doing the same thing again and again and again. And I'm only trading this pattern and nothing else. Let's get rid of all this. I've just been really questioning this play that we're looking at right now. I don't like how it's at the bottom of this 15-minute zone that we're in right now. The same pattern that I just went over. Each candle is made every 5 seconds on the chart that I'm looking at. Each candle is made every 1 minute on this chart. And each candle is made every 15 minutes on this chart. That same pattern that I just went over that I'm looking at right here, I look for that same pattern on the higher time frames, and that helps me determine what direction we are going. Bullish meaning we're going up, bearish meaning we're going down. So I try to find trades that are going with that direction. And I have a lot of other things that I add to help me really define direction, and that's what I have in the mentorship. So I feel the most proud when someone's telling me like they understand market direction better now. So this strategy already has such a high win rate. You'll see a lot of low probability setups play out. But I increase my win rate even more by understanding direction and not taking counter trend trades. Counter trend trades mean trades that are against the trend. So if the trend is bullish and you try to take a bearish trade against the trend, it's a counter trend trade. It's lower probability. I currently maintain a 85% win rate. It sounds so crazy because it is. And trading the 5-second time frame sounds even more crazy. But I've mechanicalized everything. The strategy I'm trading is so mechanical. So it's not that crazy. You can teach an old relative to trade, and especially to do this. I just don't know why a lot of gurus make everything so complicated. I like the setup that I have. This one above, I don't like. But this one I'm liking this still because we haven't dumped fully yet. I'm afraid that will dump and then come back and slice me. So I might take my order off if we dump. But I'm liking it so far. We haven't got away from it, and we haven't confirmed bullish fully. We still seem pretty bearish here. As you can see too on this higher time frame, we reacted to that 50% almost immediately on the 15-minute time zone. I tend to notice that we chop on these higher time frame zones. I think I have an example here. Yeah, look. This zone right here, the 15-minute. Hopefully it's not too small for you to see. The same pattern that I was just talking about. The sweep, swing high, swing low, tap on the zone, break a structure after the tap. Price came in and hit that 50% and it chopped a bit before leaving. It chopped its way out. This is what look it's doing right now. It's the same patterns again and again. Oops. Also too, what I'm doing might look complicated or super special. It's not. I'm watching paint dry. I'm performing the same habits that are very small and easy to do that you can do also. This is so easy that it's boring. Come on, buddy. If we get a lot of strength into the zone, I'm going to rip my order off. If we get a small reaction before getting to the zone, I'll take the trade still. My theory being that if we slice through the zone, we've already reacted to that 12.5% that I was talking about, meaning that the 15-minute zone is already mitigated. So that makes my zone currently weaker. So adding the qualification of a reaction before entering keeps me taking high probability setups. If you want to see where I'm talking about this 12.5%, this blue line right here, just like in the small zone, this blue line means the zone is no longer tradable, and we touch that. And look, we're coming back up, so we might continue continue going up. Okay, I'm liking this a bit of a pullback before entrance. Normally too, the second swing is the strongest swing. As you can see right here, the main swing is right here. This is the main zone. swing high, there's a sweep, swing low. But the second swing is higher probability. You'll hear me say that too, like second or third swing. They're normally like magnets. Like you'll see price come in and chop these second swings or third swings. In these first zones up here, the first flips, they're what I use to make the range. So like when I make the range on the session, it's the first flips. Then when I see like a setup that's a second swing out of it, it's higher probability. The whole magnet I was talking about, second swing, see what it's doing. You see this again and again and again. This isn't anything special. I haven't said it yet, but I've said it mostly every live stream this month. Also a warning, it's December price action. So you also want to be selective with everything you're doing and know what you're doing, just because it's December price action. And I think it's also really, really bad in the beginning of January because there's a lot of earning calls, basically meaning that a lot of the candles are unpredictable. Trading is very boring. Dude, yes. Like I've said before, like I've watched YouTube and played games while I was trading, but I wanted to do more. So that's why I started this whole mentorship and live streams and like content and whatnot. And I know it's like all corny and shit, but you just gotta do what you gotta do. Excuse my language. Trading is more fun when you get an accountability partner. I'll say that too. Like talking to other people or being in community with people who also trade. That's why I made it so, like I'm so focused on sticking to one model and no other model because I've been in communities and I've had accountability partners, but they're all trading different strategies, and the strategies that they're trading to can be unprofitable. But they're so like their ego or their pride, and they don't even understand that their strategy is unprofitable because they're just winning and losing again and again and again. The greatest example that I explain is that if a chicken can get funded and get payouts, that just shows that we're playing a game of probabilities. So you don't fully understand your strategy works unless you're bad testing it, you're journaling it, you're working on it with somebody, an accountability partner, you have a mentor. You can try to create your own strategy, but it's going to take you 6-7 years. And everybody will tell you the same thing. I see it set up here. I'm not going to take it solely because the swing from the top is on a zone, so I can't do that. So the swing right here is touching the zone. I can't take this trade because price will more likely hit my stop loss to react to this zone that has not been filled yet. But I can leave it here for a magnet because look, the pattern's already happening. The sweep, swing high, swing low, tap on the zone, break of structure after the tap. Leave it marked out. If we react to this, I can confirm that we're bearish and keep looking for bearish plays to the downside. I just continuously do this all the way until the session ends. This avoids having to do all the looking at news at night and your weekly highs and lows, like all that nonsense. So there's initial balance in here. Let me get rid of this zone. It's pointless. Yeah, initial balance is right here. It's this orange line and the bottom of that 15-minute zone. So the bottom of the 15-minute zone right here delivered. That was very predictable. 50% and coming down to hit or take profit. That was so predictable because we saw the same setup on the higher time frame. Price reacted to 50% so perfectly. We chopped like I expected we were going to. This isn't anything new. It's been doing this. It always does this. I'm now afraid to take this trade above because we have failed the zone and we can start to be bullish now. So I'm gonna take my trade off of here. I don't want to risk capital. It's the wrong direction. This zone more than likely might deliver. But I don't want to put capital on the table. Okay. Let's see what happens. If we react to here, like I said, we'll more than likely keep moving down. I just have so many bullish confluences. Even here, even though the zone delivered below, right here is the resistance line. He's already reacting to it. Hopefully we bust to the downside because I want to find a bearish play. That'd be the easiest play to find. Okay, I like this so far. We're slicing through. This was my range from... Oh, no, it's not. My range is down here. What is this zone? Oh, okay. This is a strong zone that I marked out. Okay, yeah. So on the move up, I found a really, really nice zone that looks clean on the 1 minute. That also looks clean on the 5 second. I'm not going to trade it, obviously. But this zone more likely might hold. This breaking more likely will stay bearish after. I talk about this a lot too, is a resistance line after a zone is broken. This one's really this is way too close. But you'll see normally it'll come and it'll hit a resistance line. There'll be more breathing room. There's no breathing room right here. And it'll make the setup that I'm looking for. So like the swing high, the swing low, the sweep. You create that zone right there. Tap on the zone and then the break of structure after the tap. It happens to the upside and to the downside with a resistance line and a zone that we're breaking for direction. Let's just hope we get it. I just want a nice play to take. I hate having to take my orders off. It's pretty frustrating. I see a play here. It's really nice. Oh, never mind. I take back what I said. It's not really nice. The sweep isn't fully proper. Like if I force it, there's also equal highs. Basically equal highs is if we knock twice already, we're more likely gonna break through the third time. There's no need to try to take a trade with equal highs. You see? Yeah. It's basically equal highs. I'm not gonna touch that. Oh, nice. We might get the reaction we want from this yellow line right here. Hopefully. There's enough breathing room for us to react. Ah. If y'all got any questions, please ask me. I know I say it a lot. If there's like anything that like you slightly don't understand, or even it's like the most dumb, if you think the question is so dumb, please, I'll answer it. I need to know what the viewer sees or what the viewer understands so I can improve it. I said it earlier, I'm redoing the course continuously in the mentorship, just so the whole goal is you come in, you know exactly what to do, and you don't have any questions. I think I'm already getting there. I have somebody who's joining soon. Hey Tom, what's up? Good morning. I have somebody who's joining soon who his second language is English, so I want to make the mentorship like more and more clear, especially for a gentleman who doesn't fully know English, because this shouldn't be complicated to trade, and everybody should have access to trade. I made 0 trades today. I put in orders to take setups. I wanted this setup. There's 2 setups I was trying to take, but I took them off because of how we reacted. I predicted where we're going. and in doing so, I've understand market direction. So love zones. How do you choose one? Um, hey Tom, I think I don't know if you're in the mentorship or not. There's somebody who joined with their name is 10. I don't know if that's you or not. But there, I in the course I have I really go over market direction. I'm basically the ones that I decide to trade are the ones with the trend. So if they're following the trend and I find a zone that meets all my requirements with the trend, then I'll take it. If it's not to my standards, I won't take it. Dude, get in the mentorship. It's lifetime access right now. There's so much value in there. I'll make you profitable. All I ask is that everything you know about trading, drop it, start all overs with me, and I promise you I'll make you profitable. My strategy, you can understand lower direction, higher time frame direction. My strategy works on any market, any time frame. There's so many possibilities, and you don't need to be going and looking at like supply and demand or high and low buffoonery. Like you just avoid all of that. You just look for this pattern everywhere. This pattern that shows up on the 15-minute, pattern shows up on the 5-second, on the daily, even on the 1 hour. Dude, go be a dishwasher and get into it. Just do what you got to do, or sell some stuff around the house. That's it. Masterclass, dude. Thank you, Peter. I've been wanting to talk to you, Peter. I really start hoping you start posting your back test. And please ask me questions in the chat, Peter. I want to know like what, because I know you've been watching and like entertaining everything. So let me know. Like I want to know exactly what you're struggling with or what you're working on, so I can help you. And this is so early, so I really want to be like hands on with everybody right now. Are you gonna stream? Yeah. So I more than likely might not stream 12:30 to 1:30. I want to start. I'm only might not because we have FOMC. This is a hot like most of the time when this news gets released, price will either go really 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 high or really really low in a moment of seconds and stay like that, like constantly moving 30 minutes before news is released and 30 minutes after, and news gets released at 1 o'clock. So if I trade at 12:30, it'd be a bad idea. Tom, do you trade on OPEX days? I only trade red news days. I'm not sure if OPEX is red news or not. All I've noticed though, the days where I struggle the most are FOMC days. And I go over my data often, and I have like a million trades that I go over, and I have a database and tags and whatnot. And basically, FOMC has been the day where I've taken my losses. But it's basically because what are y'all talking about? It's just news. When news is being released. So on this program, you see these little electricity things. It just tells me when news is being released. So I know to, and it says impact is high. So I know to not trade that day. On this program, you can see when news is released also, like on the full chart, exactly what time and whatnot. Like I have to make this mean. But yeah, so it just basically tells me when news is happening. And oops, let me put it back to over here. Let's change this to, there it goes. So we're just being selective here. It's so important to avoid news trading days or trading when news is happening, because volatility gets increased. Volatility just means the speed of the candles, like how fast the candles are moving. And since we're on such a lower time frame, we don't want candles to be jumping around super fast. Is it possibly profitable trading during news releases, or just too risky? So in a sense, there's a million strategies to trade, and you can go on the internet and look for another strategy. There's so many strategies to trade. Most strategies are very complicated. They make you use like laggy indicators, or like it take like a whole year just to understand the strategy. And there's some strategies that only trade news. Yeah, basically you're just gambling, but there are profitable strategies that trade news. And it's a hard truth to hear, is that the stock market is manipulated 24/7. And that is proven because the strategies that you can find to trade news most of the time will work. There's a lot of like news trading strategies that are I have like an 85% win rate. Because news follows the market. The market doesn't follow news. If I make high time frame zones, you can kind of see where news is going to react to these high time frame zones because the market is manipulated. And you can argue and say it's not, but I promise you it is. It's just we got to play and stick to a strategy, follow the strategy, and you'll be okay. The more mechanical your strategy is, the more profitable you'll be, because you're taking out intuition, and that's what like traders talk about. Like you need intuition, blah blah. But that happens when you're sticking to one model and one strategy. Also, a lot of people talk about like their A++ setup or like their higher probability setups. That's just nonsense. You should be only trading that setup and nothing else. So the A++ setup that you're talking about should be the only setup that you trade. I see a setup here. I think I'm gonna go for it. Let's see. I like everything that I'm seeing. 10, 3. I kind of been waiting for more data to happen, the tap happen. I'll go over it shortly in a second. And why I like this. Yeah, dude, don't gamble. A lot of like traders too fail because they have a gambling addiction. That's why I try to systemize everything. I try to keep everybody away from proper trading until they master the strategy. Sweep, swing high, swing low, price comes out, taps the zone, break structure after the tap. I'm pretty sure we reached 100% away, but I'll double check it because I don't trust myself. Yeah, 100% away right there. And then we wait now. I like this a lot. The setup I was just talking about exactly happened. And then see new name trading. Price comes down and hits the resistance zone. It didn't hit it exactly, but it still reacted in the space. Came and gave me a sweep, just like it did right here. And then price came down and then tapped. The one that I was talking about when we break an area and have resistance line. So I really like these setups. If I get 3 taps on the zone, I'm taking my order off. Let's see. And we're expecting a loss. Come on. Oh no, we filled 40%. If we touch the blue line, I have to take my order off. Nice. My take profit is there. And my stop loss is up here. And we expect a loss. Let's see if our take profit gets hit here. It's that easy. I'm now partaking in gambling. We're playing a game of probabilities. This is a nice setup. It's a perfect setup. And if we get a loss, it's due to probabilities. There's nothing I did wrong. Same thing for the win. There's nothing I did correct. I just followed the rules. I did what I needed to do and I placed my order. There's nothing special about this. And if we take a loss, we just journal it and we move on to the next trade. So let's see what happens here. I'm not liking price action. It looks like our stop's going to get hit here. And then we'll just mark it up. Let me get rid of these drawings so when I do mark it up, it'll be easier. Oh no, I didn't mean to do that. There it goes. So look, I'm happy we finally got a loss on the live stream. I haven't got one yet. That was proper. So what can I argue with? Oh, look at that. I just gave myself a good reason why this trade was bad. Okay, this is why we journal. I'll tell you too what it is right now. Let me do this first. Okay. So let me screenshot this. So we get our trade that we did and we put it in our journal. Let me try to make the journal where you can see it. Okay, so let me write down what I'm going to write down for the journal. Okay. I could have avoided this loss by seeing that we were chopping the 15-minute zone that we were in. Boom. That easy. And then we just wait for the next setup. And to explain to y'all what happened, if we look at the higher time frame here, we see this play. You see the sweep, the swing low, the swing high. Is it butched right now? No, it's all right. Okay. Swing low, the swing high. Try to keep it like right there. Price comes out, taps the zone, breaks structure. Okay. We then go to our lower time frame. We see where our setup is at. Our setup is right here. And look at what is right under it. That 50% of that higher time frame zone is right here. So my speculation could have been that we're going to react to the zone and shoot back up. And this trade would have been fully counter trend. And counter trend is a lower probability. I'm very happy we got a loss, so I can actually go over and talk about it. I've been winning so much on these live streams. It feels a bit unfair. This zone more than likely will deliver because all the steam that is happening, it needs a break. It has a pattern that we're looking for. I just don't like the eco highs. So as you can clearly see, we are gambling. We're just professional gamblers. A lot of people will argue too, like trading's not gambling, trading's not gambling. But in a sense it is. Because there's no such thing as 100% win rate. How much did you buy and lose? So each trade, I only risk $200. And I risked $200 to make $200. So since I risked $200, I lost $200. I always do 2 losses or 3 trades. And days on FOMC, like today, are days that I recommend avoiding because volatility is unstable. The mistake that I made right now was 1000% due to my ignorance and not seeing that we were in the 50% of that 15-minute zone. But that's just an issue that I put in my journal. So at the end of the week, I go over my issues. And the next week, I understand, hey, make sure you check that we're not in the middle of a higher time frame zone. I just keep doing it again and again and again and creating new habits. But yes, I do 3 trades or 2 losses to just keep my win rate high and to stay profitable. See, like I said here, more than likely this zone's going to deliver because of the steam. So it needs a break. What Noah, what the whole point is when you get into the mentorship is that we help you master the skill. You then master the skill, you understand what you're looking at, you understand what you're seeing. Then you're going to do a prop firm challenge. Basically, you're given money to perform the skill. So you're just doing exactly what I'm doing and you get paid to do it. And then I think after like 10K, most prop firms give you 100% of 10K. And then after 10K, they take 10% of everything you make. And then you can get multiple accounts to trade. That's what I'm trading, multiple accounts. Recently, I've been really thinking about doing it. I'm more than likely going to do it. Is tell all the mentees to get a funded account instead of having to pass a challenge, because there should be no reason why you can't apply the skill if you do everything I said to do. Because you should not be trying to take a prop firm challenge if you don't have max conviction and profitable strategy. So then you're just gambling trying to pass a prop firm challenge. So yeah, I think I'm gonna skip the afternoon session solely because FOMC. I would not be able to take any trades 30 minutes before or after red folder news, and it happens at 1 o'clock and I trade at 12:30, so I wouldn't even be able to participate. But I will be working on the mentorship videos though, so I'll be productive. Hopefully we find a setup before 11 o'clock. Seems like nothing's going on so far. All we've been doing is up and down, up and down. See right here. There's volatility though, so it's a good thing. These big moves, I would say it's higher volatility because more volume, more people. And this is happening because we're on a news day. And FOMC is one of those really big news days. we're reacting to initial balance, which is that um, first hour high and low of the market open. No, I was about to say I see a play, but it's too sloppy. If we find no trades at the end of the day, then we'll be down 1R, meaning we're down one trade. And we risk all my live streams $200 per trade. The prop firm that I was thinking about pushing people to do, the one that gives you funded money immediately, I was thinking of risking 5% of drawdown instead of 10%, because you're already funded, so like there's no need to be rushing. But if you have any input, I'd love to hear it. And drawdown is the amount of money you're allowed to lose. So you're giving capital to trade with, to perform, you get paid to perform. But if you lose X amount, they take it away from you. Because like obviously you can't perform. And there would never ever ever be a reason why you blow an account if you listen to what I say. I'm real big on risk management and limiting your trades. And if you don't do what I say, you're not managing risk and you're over trading, you're just gonna blow everything. You're gonna do a boom and bust cycle. You're gonna keep struggling. So master the edge, then have max conviction in the edge, and then you can apply it. This is no different than being a pro basketball player. You're just gonna show up to practice and do it again and again. Also, to know if you're still watching, a lot of people say to avoid trading December, and what I say is just be more selective. So just choose your highest probability setups and only trade those high probability setups. The only play I would be interested in right now is if we dump and then maybe a play to the downside. Because it looks like we're about to dump, but I'm not sure. We'll see. Looks like we're reacting more to the initial balance than we are to the zone, which gives me more confluence that we're not gonna dump. I am prepared for it though. That's what we're doing. That's why I make all these little zones. I have a plan if we go up or a plan if we go down. If there's any words too that I say or like lingo that you don't really know what it means, ask me also, so I can tell you. There we go. More likely gonna deliver this zone. We'll see. I really wanted to break to the upside. I bet I can find a bullish play if we do, because we normally get a huge influx of volatility, meaning volume, meaning people, around like 1040 to 1050 this window of time. And sometimes I can find a play in this window of time. So I really hope that we get a big push towards one direction. Come on, buddy. I'll quickly go over breakup structure and sweeps. Super easy. Price going down, price going up. We're going down, we're breaking structure, also known as a sweep, if you want to say it. coming down, breaking structure again, coming down, breaking structure again, going up, breaking structure to the upside, going up, breaking structure to the upside, and so on. So then how do we identify a sweep and a break of structure? They're both the same thing. They're just buzzwords. Play to the downside, sweep. So we get that swing high. It's important. We then come down, break structure to that swing low. So that's important. We just connect a zone to those two lines, swing high and swing low. Let's move this here. Am I in the camera too? Y'all should have said something. No one tell me nothing. I'll go over it again. Let's do this. I'll do it again real quick since nothing's happening. Okay, right here. Let me see if I can put it in a better spot. Right there. Okay. Sweep or break of structure, same thing. Sweeping this swing high. So then we mark it out. It's important. Price comes down. The swing low, break of structure or sweep, same buzzword. Boom. So then we create a zone with that new swing high and that new swing low. So that new swing high, that new swing low. Let's create a zone. Let's connect it. So the clear is 10 times more. The sweep is 10 times more clear now. Then price break structure to the downside here also. So the tap obviously, then break structure or the sweep. After you can gauge the break structure is happening or the sweep is happening again and again and again, you should be able to see it on the candlesticks. So let's make this a line chart. Let's zoom in here. So you see structure breaking to the upside right here. Or if you want to say it's a sweep, come up and broke it. Just like the drawing I showed you. Right here to another sweep. Price came down, broke it, just like I showed you. And let's make this a candlestick. Maybe you can see it now. Structure breaks, just like right here. There's a swing high. The new swing high gets made. Like right here, did it break right here? No. What about the downside? Yes. Swing low, structure broke. Swing low got broken. And every blue candle on the screen is buyers pulling up. Every pink candle is sellers pulling down. They're constantly fighting 24/7. So the blue candle price goes up. The pink candle price goes down. Blue candle price goes up. Pink candle price goes down. And so on. Again and again and again and again. When you can identify those sweeps, those break of structures, the zone becomes easier to create. So let's say in this picture we're looking at, we want to take a bet to the upside. So we would look for the sweep first. I see the sweep. I then would get that swing high and swing low that participated in the sweep. So that'd be the swing high and the swing low. The lowest one's right here. I would create that zone. So let me get it real quick. That zone gets created. Then I'm expecting price to come out the zone and tap the zone. So I see the pattern, the sweep, the break of structure to the upside and the higher swing. This is the only pattern we're looking for. Price taps and it didn't break structure. So I move on. If you're able to do this again and again and again, you can always find zones. Let me show you here. A sweep of accumulation. It's very tight, but here's a swing low. So let's look for the swing high. Moving left, it's right here. So I create that zone. We see that we're sweeping accumulation here. And the nicer the sweep, the more clean the sweep, the better the zone. So like I'll sometimes skip a play like this because we're only sweeping a bit of accumulation, but it's not really that proper. It's weak. So I won't take this trade. But I'll leave this open to understand direction because of how well we're respecting the zone. Come up, and you're tapped. Broke structure. This zone might even deliver more than likely, but I want to play high probability setups. So why would I take that trade? We're just chopping. That volatility hasn't came in yet. Very funny how I was just talking about the days I take my losses on are FOMC days, and I took a loss. But the loss was totally me because I could have avoided it, understanding that we were at 50% of that higher time frame zone. Just wasn't paying attention. Yesterday we hit broke even because that one trade I was stretching and we got filled and I didn't have time to move it fast enough. So then it ended up being break even, which is frustrating and it sucks. Um, but it is what it is. I like taking 3 trades a week rather than 3 trades a day because I want higher probability. Oh, the biggest thing too, why I wanted to move everybody to a funded prop firm instead of having to do the challenge is on TradingView you can do bracket orders, and on TopStep X you can't do bracket orders, and I hate that. And bracket orders basically means like if you put a limit order here, you can place your stop and your take profit without having to move it. So you just set your take profit and your stop, and it does the job for you. You can't do it on TradingView. I mean, you can't do it on TopStep X. You can do it on TradingView. Also, too, you can copy accounts on TradingView whenever you use that level. But you do need to run a copier off NinjaTrader or Quantower. Quantower lets you have multiple Rithmic connections. NinjaTrader only lets you have one Rithmic connection and unlimited trade of 8 connections with the Replicantos copy trader. And you make TradingView your primary user. So when you execute trades on TradingView, all the other accounts are copied because the NinjaTrader or Quantower Trader copier is currently running. So you just make that TradingView account the primary and then trade on the TradingView account. So that's why I want to push on the mentees so like they build that habit in the beginning. So then when they start to copy trade, the transition isn't difficult. Like they're just going to be doing what they already been doing. The only difference is that they'll multiply their income. But the instant funded prop firms are expensive though. I think like just to even get 1K is like $300, and the industry standard, which is like the 50K account, $25,000 worth of $2,500 worth of drawdown, I think is like $400. But you skip the challenge, so I think it's worth it. But if you just do the $300 one instant funded, and you risk only 5%, it's like $50 a play. Um, then you're basically making money already, and you can get 7 accounts, I think. So you can that $50 times 7, then you can always raise your risk to $100 or $200 a trade. Because I normally risk about 13K a trade on my accounts, and I kind of want to just start doing that in the lives. I think it's a bigger sell point than the 5 second time frame. But I don't want to sell lifestyle. I want to sell scale. I'm very conflicted. Gotta get rid of all these drawings. As you can tell how passionate I am about and big I am about scale and not lifestyle and money. Because even if you have money and you're all rich and whatnot, like how different would your life be from today? It all starts with self love and being at inner peace with yourself. A lot of people say too, like when you start trading, you wake up. I disagree. I think it is you begin self love, and if you start self love earlier than later, then you'll succeed. Like if you got kids, like of course you're gonna succeed because you're taking life serious. You know what to do. Or like even if you have a partner or supportive partner too, that like you can communicate with, you'll like want to begin self love, like waking up early and exercising and all that buffoonery. Because if you started making 40K a month tomorrow, I assume you're not gonna want to stay up late and be sitting on the couch and just like effing off. You're gonna want to go put in the work and then f off later. Also, too, the fantasy that I'm selling. If you get multiple accounts, you take one trade, which is so easy to do, then boom, you just made your yearly income in one trade. I just got off the phone with my job. I missed about 15 minutes. No problem, Noah. Basically, I was just talking about copy trading and how like I want to help everybody master the skill and then move everybody to a funded prop firm account. So then they're already giving capital. You don't have to take a test. Yeah, basically, you learn the skill, you apply the skill to a prop firm, they give you money to trade. But first, these prop firms say, hey, make 3K consistently first, just do it one time, then we'll give you money. But if, I was thinking about skipping all of that and making it, I'm real big on everybody mastering the skill first. If you master the skill, pushing everybody to get a funded account instead of skipping, they're just skipping the entire challenge itself and immediately just getting funded. I think that's a better route in the long term because then you'll be building habits and be taking it more serious. The issue is though, like regular prop firms, you can get an account for like 25 bucks or like $50, but a funded account immediately is like around like $300. And you have access to less than you would have if you paid $25. So the $300 funded accounts that you have to pay for, you're only given $1,000 to trade with. My first job site is up to date. Customer called me and posting on that. So, oh, dude, yeah, shit happens. I get it. I hate dealing with people too. I enjoy doing this though because all I'm talking about is what I do. But just people in general, I hate. I feel like a lot of people too are so filled up with instant gratification and entitlement. They're just being stimmed 24/7 because of the phone. Oh, I see a setup. Let's see if we reach standard deviation. I like the setup too. Okay. I like how much volatility we have coming out of it. Ah, never mind. We're going back in. I think I'm going to pass on it. Yeah, never mind. We'll see. Oh, look, it rejected. We'll see. We'll see. But yeah, basically, I just want to get everybody on a prop firm. There's no need to be trading your own capital. It's stupid. You're not going to be able to leverage what you can do with prop firms trying to trade your own capital. I love the setup for a second, solely because the volatility leaving the zone. As you can see, this big giant candle. I have to make it green. Sorry, this big giant candle right here. It left an FEG. I don't really teach FEGs. It's an ICT concept. Basically, there's just orders sitting in this blank area, which gives me more confluence on the zone. So I love this a lot. I loved how we tapped, but we came back in, so I just skipped the play. And it's the second swing to the downside. I was talking about earlier. Here's the first swing. We came down. This is the second swing. The second swing is higher probability. So it's like, oh, I love this play, but it disappointed me. Yeah, nothing's happening. And we just died out of nowhere too. Oh. This is a great example of an FOMC day. FOMC days don't happen often. Red news days don't happen often, but they do happen. Yeah, I don't see nothing. I see a play to the upside that is very high risk, and I'm not going to take it because the setup is so ugly. But it's right here. And it might even deliver too. In situations like this, like what I'm looking at right now, getting to a level where you know that a play is going to play out, like this play is more than likely going to play out. It took me a minute to get here because before I was fighting FOMO. I was fighting the urge to get in because before I'm like, this is going to play out. Why am I not going to take this trade? Like, let me take it. Let me take it. And there's only so many times you can do that before you blow an account. and you're over leveraging, you're trying to make up the losses you made. Just the same buffoonery. Start the habit now of doing 3 trades or 2 losses. Make sure you do that when you're backtesting, and also do it when you're live. I don't think we're gonna get anything. There's something here. I don't know. That's real ugly. And 100% has to be a lot further than where it's at now. Yeah, 100% is right here. You see the setup that I'm looking at? Sweep, swing high, swing low. Price came out, tapped, broke structure. Standard deviation is up here. I'm just so unsure about this because how big it is, and that we have 2 big extensions, meaning like volatility just came out of nowhere, volatility came out of nowhere again. It means I don't like the zone. It was created off like impulses and like not real price action. Look, upside zone. There's a zone to the upside, you're saying? Like this one right here? I don't see which one you're talking about. On the left? Oh, like the bearish, this bearish play right here? Is that what you're telling me? I won't take this at all, by the way. Because that we seem so bullish right now, and we've gotten so far away from it. I wouldn't put risk on this trade. Do you prefer old zone? I don't know what you mean by that exactly. Do you prefer old zone? Yeah, I don't understand what you're asking. Like a different zone that I'm not marking out, or like old zones in general? I If I see price like really take off from a zone, like really go far away, and then I see our bias flip on the way back, I won't take it. And here's a great example. My confirmation on when we flip to bullish is 50% of this higher time frame zone. We reacted perfectly to it, and we pushed real hard to the upside. We have normally there's a zone that stops. I mean hindsight. Yeah, there's normally a zone that stops the steam that will hold as a magnet. And as you can see, it was this one. And the zone that holds as a magnet is normally a really pretty zone. So it was this one. Obviously, this had equal highs. So it came in chopped. This is predictable, but I still believe that the steam is gonna come back and push again, because we can confirm that we're bullish now. So any trade that is counter trend, betting to the downside, is lower probability for me. It can still deliver. You can still make profit from it, but we've gotten so far away from it. We switched biases now. There's still a lot of steam, and to top it all off, it's an FOMC day, so there's no way that you should consider taking a counter trend trade, especially on an FOMC day. This is a 40% example I want to talk about right now real quick. We came and we failed right here. White lines are 40%. We came and failed 50%. Okay, even if we cross 40, and then came and touched the blue line, meaning that the zone is mitigated, no longer tradable. So as you can see on this trade right here, we failed, we touched the blue line, and then we came for the stop loss, continuing the move down. This blue line means that the zone is mitigated. So it's no longer tradable. What you can do too is, like, price comes to the blue line, then you move your take profit to break even, so you can have less losses, but you can avoid that by just taking trades with the trend. So in hindsight, this green box right here is a counter trend trade because we were chopping this bearish zone. We did not break the bearish zone and we came straight down. So trying to take this trade would have been very bad. And it wasn't to my standards. I didn't like how it was graded, so obviously I didn't take it. But I used it for direction. Just pointless here. Looks, I still fully believe that we're bullish. We just have so many indications. But it won't matter because we're going to hop off right now. Let me tell the Discord too that I'm not going to be trading in the afternoon. Because FOMC. Oh, somebody joined. Karam. Yes, sir. All right, let me see. Let me just put in the chat real quick. Announcements. Here. Oops. I will not be trading the afternoon session due to today being FOMC. Due to the ones did show up. Okay. I have to tell the Discord. Okay. And then I'll tell you. I'm hopping off. Get into the damn mentorships so I can make you profitable already. I love doing this. I love helping. I love teaching. What is FOMC? It's basically high news release. They say a bunch of buffoonery and price goes really high or really low, like almost immediately. So as soon as they say something, all these candles right here will just take off to the upside or take to the downside. And the best way to explain it is these candles just spawn in. Like, you see how we're just looking at this right now? They're going up and down. I'll blink and the candles will be like right here already, dumping down. They just spawn in. So yeah, I just not gonna trade it. And this what I'm talking about happens on a higher time frame. So like, imagine how crazy it looks on the 5-second time frame because I'm looking at time frame so low. So yeah, just avoid FOMC. But FOMC days overall are just bad to trade. You're not gonna find anything, just like I did, for example. I just took a loss. Okay, so yeah, we're in the full trading day session. I'm not gonna trade afternoon because of the news. We are down $211. That is awesome. Because on our best days we're making $600 to $1,000, and our worst day, our absolute worst day, is negative $400. So you always be in profit. You continue to stay consistent and profitable if you follow your rules. That's what I've done. I made everything mechanical. I made everything easy. If you have questions, please ask me. I'd love to help you. And I think that's it. I don't think I have anything else. Once again, I'm not trading afternoon because of FOMC, because of the news. Message me, talk to me. I'd love to help you. But all right, we're ending the trading session. I have to pump out a bunch of content today. I'm falling behind on all the social media. If you want a video on something too, let me know. I think that's it. I'm gonna redo the mentorship today. Also, I'm gonna make it a lot. Like, I'm just gonna keep making it better. So yeah. All right, hopping off. Enough of me yapping. Sorry, I went off for too long. And that's it. I don't want to leave, but I have to. And you know what? Let me lock myself out the account. Look right here. Lock myself out all day. So there's nothing I can do now to get behind the screens. There's no way I can trade for the rest of the day. I locked myself out. Okay. Well, we're logging off now. Oh yeah. Let me show you too if you want to see it. I know it's all chopped right now. But you can't see it. 4 hours. So I'm not gonna be able to trade afternoon now. Okay. All right, I'm hopping off. Thank y'all so much. I really appreciate y'all staying. I really appreciate y'all sending likes, talking to me. I really love doing this. Okay, I'll talk to y'all later. T2Y out.